Hey folks, if you've been waiting for the crypto bear market of 2022 to be done, I think we are there. I've got a great crypto market update for you today, moving into July 25th, 2022. We're going to talk about Bitcoin, we're talking about Ethereum, we're talking about XRP, and I'm going to explain to you why I think we're done with this bearish trend and exactly what we should be looking at to get into the next phase of the market. It's going to be an awesome update. Let's go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro. You can check us out over at trademaestro.com. I hope you're doing fantastic. Hope you've had a great weekend and ready to kick another week off of trading. And if you're like most crypto traders, you've been waiting for the opportunity. When is this bear market going to be done? It has been brutal. It has been painful. People have lost a lot of money. I've got clients that are sitting here screaming, saying, I can't believe that I lost so much money. And I got people that are saying, help, how do I survive a bear market? Listen, folks, I got great news for you. We are, I think, very, very close to the end. We're going to talk about that in this update. I want to warn you, it's going to be a little bit of a long update. I'm going to try to use some chapter markers so that you can bounce around a little bit. We are going to do a workup on Bitcoin. We're going to do a workup on Ethereum. We're going to look at XRP. And that's probably all we're going to have time for today. But I'm going to do a lot more this week because, like I said, I think we are rounding the corner. I think we may be through the corner. If we're not through it, we are very, very close to rounding the corner for this 2022 crypto bear market, which means we're starting to look for some really good opportunities. And we got a lot that are setting up right now. So let's get over here and take a look. You are looking at my charts for Bitcoin. And might seem a little overwhelming to see all these lines, but you know, we've been charting this all along the way. Let me just kind of update a couple of things in case you haven't been following me and in case you haven't been paying attention to some of my analysis and whatnot. There's a green lines running through here. This is a trend line, and we actually thought that was going to be the major support as it coincided right in here with both a horizontal support line and that diagonal trend line. And we hung out there for several weeks. But then, of course, as I'm sure you know at this point, we finally dropped down in June, and we've landed here around this $20,000 mark. Now, 20,000 for Bitcoin has been a pretty important number. If you look back in time towards the end of 2022, that 20,000 number was the resistance there. It finally broke out and continued. But if you go back really far, and I talked about this last week in my update last week, if you go back to 2017, 2018, when crypto, started getting listed, they started listing public futures and stuff. This was actually the peak. We are right there at that peak. So this is a very critical pivot area going all the way back to 2018. And it has been holding so far as a support. But let me zoom in here and show you a couple things. This is a daily chart, by the way, in case you're wondering. Notice what you see right here. 1, 2, 3. Boom, boom, boom. There is your triple bottom. Let me teach you about the triple bottom here in just a minute. But before we do that, I'll teach you first. All right. So there's your triple bottom. You got a triple bottom on Bitcoin. Let me explain this to you if you're not familiar with how bottoms work. In the market, in all markets, we get topping patterns and we get bottoming patterns. And so there's variations for tops, there's variations for bottoms. This is one of the ways that we call market bottoms and market tops. And one of those patterns is something we call a triple bottom. So let me show you how it looks. Basically, with a triple bottom, you've been trending down, you get to a support level, you bounce once, you rally, you bounce again, and you try a third time, but you can't do it. And from that point forward, there's a magical marker on here that I'm going to mark in a different pen color. We're going to put it in yellow, and we call this the neckline. Now, it doesn't really matter why we call it the neckline. You just need to know that we call that the neckline. And the next thing that happens with these triple bottoms is we break out, and more often than not, and I'm going to go to a different pen color yet to illustrate this. We'll try orange. More often than not, the pattern goes that the trade retraces down to the neckline or somewhere in this vicinity before continuing. So there's the pattern. That's what we're watching for. And in the process, I'm going to draw a couple of other things in here. In the process of this whole thing happening, those moving averages during this time, they come down and they switch and they start moving along the bottom side of the trade instead of across the top side of the price action. So that's what we're looking for. And the ideal spot to enter this trade is, right around in here, because what that gives us is it gives us some confirmation that the trade is moving, gives us some confirmation that the pattern's already been put in, and for the most part, it sets us up to move with the right timing. So let's look at what's happened. If we get rid of, we're not going to get rid of anything. We're just going to look at it like it is right here. Take it full screen so you can really see it. There's your big bear trend, and boom, there's one. Bounce 2, bounce 3, and let me go ahead and draw this. I'm going to do it with a yellow pen because that's the one I did just a minute ago. Right across there's your neckline. You see that? I'll just go ahead and annotate that, NL for neckline. And where have we gone from here? We've bounced. We broke through the neckline, and look at that. We've now pulled back to the neckline. And this is one of the reasons I'm pretty excited to see where this thing goes. Is it time? Are we ready to break out? You'll also notice in here, if you can see it, the moving averages are crossing. They've all crossed down now and crossed up, I should say. Moving in the right direction is what I'm trying to say. And when this trade moves, when you start seeing these candlesticks move like that, the last moving average can come over, this 10 and the 20 will stretch out here, and you'll have that final piece of confirmation that we like to get with our trend reversals. So there's a lot of great things happening. There's another thing that's happening on here as well. I'm going to draw your attention to, see if I can kind of zoom in a little bit closer here. And for those of you who know anything about your chart patterns, take a look at that neckline that I just drew in there. What is this one right here? This is a flag. This is a bull flag pattern. And during a bull flag, several things happen. So again, we're talking a lot about chart patterns here. I don't always do this much on chart patterns, but it just so happens we have a lot of them, and they're very confirming right now. And when we deal with a bull flag pattern, or really any flag, but in this case, it'd be a bull flag. When you deal with a flag pattern, here's what happens. Understand that trades don't go straight up and they don't go straight down. They go up and they come down, up, down, up, down. It's during these little movements right here, we call those continuation signals, okay? Right at the beginning of this trade, we're starting to see one. Okay, so if you look over here and we change our pen color to something maybe that'll pop a little bit better. Here's, try this blue. There's your breakout and then your pullback. Now what we're looking for is to move in this kind of a fashion. You see that? Okay. These little corrective patterns, these little slightly down, slightly sideways moves, those are called continuation patterns. There's a few things that happen during those continuation patterns. Number one, it runs either sideways or counter to the primary trend. So in this case, the trend that's setting up as a bullish trend, it's running sideways and down. Looks like a little flag. So if you get rid of all the price action and you just look at the drawing on here, it's like, oh yeah, we're waving our flag. We're going to continue. Okay. That's how that looks. Another thing that happens in here, for a typical flag pattern, another behavior that usually occurs, not always, but usually occurs more often than not, is your volume. So let me make this volume a little bit more legible. I have it pretty light, but sometimes hard to see on the video. So we'll do this. And I just want to show you what's happened with Bitcoin volume during this move. So the breakout had increased volume. Yay. And during the flag pattern, that's our continuation pattern, look at the decrease in volume. Yay, here's what we're watching for. You ready? This is what we're looking for. We're looking for a bullish break, because what the traders are doing, whether you realize it or not, traders are testing that pivot area that we know is a neckline. They're testing that to see if it can hold as support. And if it can hold, then you're going to start to see the buying come in, and that you're looking for a couple bullish candles breaking out, and we're looking for an increase in volume. Those are the two big things that we're looking for right now to finalize this trend and really set us up for the next phase of the trade. So with that in mind, that's workup on Bitcoin. That's actually a workup on a lot more, because we're going to talk about that with the other stuff. But let's just kind of resize all this and see where we're going. So we've got a lot of history in here. We've been trading this thing for a while. Our next major pivot area is right in here. It's that orange line. Now, that orange line has a number, and that number is about 30,500 roughly, give or take a little bit. Bitcoin's pretty volatile, so it's not an ideal a specific number. It's just kind of generically, that's where we're going, pretty close to that. So 30,500 is your next major target area on Bitcoin. And what I want to do right now is I'm going to go ahead and set this thing up, give you guys the trade setup, the whole thing, whole shebang here. Let me just preface this. If you've never seen me do trade setups, if you're not familiar with how I do them, because I have spent most of my trading career as an options trader, I'm not that guy who's going to go in and try to bottom fish and try to find the very, very bottom. What I'm going to do is I'm going to wait until the momentum's moving, and then I trade with the direction of the trend, and I trade with that momentum. So the way I do my trade setups is I do an entry price, and then I do my target, and I do my stop, which is where we're going to limit our risk. So I'll take this thing full screen so you can really see it. We're going to do an entry price moving above our previous swing high. This will be our entry, and that's going to be right around 24,000. I'll get the exact number here in just a minute for you. And then we're going to trade up to our target, which is going to be up here right around 30,500, as I've already mentioned. And then you say, well, when do I know this trade's gone bad? When I know the trade's gone bad, that's where we're going to put our stop. And for me, we're going to start that thing down here about just below our 20-period moving average, which is right below our neckline, and I'll get you the number for that, okay? So that will be our stop, and there's my trading plan. Now, if you've never done a trading plan like this, you don't have a trading plan, and you got to know that. You know, I've gotten into it with a lot of different people over what's their trading plan, and they say they have a plan, but their plan is to just go buy the trade, whatever that is. In this case, it would be Bitcoin. And listen, just buying and holding, buying and hodling is not a plan. I mean, it is a plan. It's just not a very good one. And that's how I end up with a lot of clients. In fact, I'll tell you, before I go any further here, I'll just tell you about some of my clients that I've worked with on a private one-on-one basis. One in particular, he lost over 7 figures on this trade. He lost over 7 figures on Bitcoin, not because he wasn't a good trader. Well, he wasn't a good trader. Not because it wasn't a good opportunity. He didn't know how to get out. And he had this idea he was just going to buy and hodl, buy and hold forever. And unfortunately, what that cost him was over $1 million. And so he finally reached out for help. We started working on his trades, started working with him. This was actually last year when the other crash happened. And so he'd lost a lot then, but guess what happened? On the way back up, he was able to capitalize on it, make a lot of that money back. And on the way back down, he was actually able to position on the downside and make some money on the way back down as well. So he's doing a lot better now because he learned that trends don't always go up, and he learned that trades don't always go up, and all this volatility that we're seeing in Bitcoin and all the cryptos really, it's actually a trading opportunity if you know what to do. But if you don't know what to do, it can drive you absolutely mad, and it can even make you think that these aren't good assets to invest in. So let's get back over here. Here's your trading plan. You got to have that trading plan. If you don't have it, then you know you're going to be up a creek without a paddle here. That's how we say it down south. All right, so that's where I'm going to put my entry right there, that line. I'm going to pull my stop up here just below my 20-period moving average, and my first major target is going to go right there. So let me give you the numbers, and you know, just watch it. I'm not telling you to place this trade. In fact, it's quite the opposite. This video is for educational purposes only. I'm not at all telling you exactly what to do. What I'm telling you is how I am going to approach Bitcoin. And my target on this is 30,500, as I've already mentioned to you. My entry price ended up being a little more like 24,440. And my stop is going to come in here right around 21,188. Now, I just want you to understand, if you're buying this trade, depends on how much you're putting into the trade. But it doesn't matter if you put in $20,000 into it or $100. It doesn't matter. If you set the trade up like this, you're sitting right at about a 2-to-1 reward to risk ratio, meaning for every dollar you put on the line here, assuming you use this stop of a 21,188, for every dollar that you're putting into your risk, you're looking to make $2 of profit. And here's the thing: when we get to this target, you don't necessarily have to stop. Adjust your stops, yes, but you can stay in the trade because there's a lot of other targets up here. The next target is going to be around 34,500. Then we'll have a target up here around 40,000, and we'll keep going from there. Now, I don't think we're going to go straight up on Bitcoin. I think probably my hunch is what's going to happen is we're going to trade to this 30,000 range, and then we'll probably see some selling come back, and it'll probably channel for a little bit, and we'll get into a period that we call accumulation. So that's what you can expect for Bitcoin moving forward. All right, that's the first piece of the update. Now let's go to the next one, which is Ethereum, and I'm actually even more excited about Ethereum than I am Bitcoin because the trade setup that's happening. So let's zoom in here. You're going to see I've already got a trading plan set up, but this was from a previous trade and it never materialized. That plan never came to fruition because we went down instead of bouncing. So we're going to be moving that plan, and I'm going to do it here on the video for you so you see where we're getting into. But before I do that, let me show you a couple things that are going on with Ethereum. And I think you're going to like, I'm excited about this. 1, 2, 3. There's your 1, 2, 3 triple bottom after the big bearish sell. There's your neckline. We broke out, and look, we're building a continuation pattern called a stair step. And not only are we building it, we're well beyond the neckline. This thing is already moving. The moving averages are crossing. We're above all 3 moving averages, my 10, my 20, and my 50, where the 10 has crossed the 50 and the 20 is moving right behind it there. We got a stair step, which is a continuation pattern. I mean, this trade is ripping and roaring, almost ready to go. You're also noticing in here, hopefully you're noticing, look at your volume. Your volume has been declining rapidly during this sideways move, but with the breakout, the volume came in. So that's what we're looking for. We're looking for another breakout here, a couple bullish candles with increasing volume, and we're pretty much confirmed for this trade. Now, you might notice, and I should have talked about this with Bitcoin too, but it's also doing the same thing. You might notice that our stochastics oscillator is overbought and it's trying very hard to cross down, okay? This is not inherently bad and it's not inherently good. It's definitely not inherently good, but very, very often, if you go back and let's see how much time we got here. Well, we're 17 minutes into this. If I can keep this short enough, I'll show you some other times in history. But if you go back, you realize that very often after a bottoming pattern like this, that first breakout, when it starts the new trend, your stochastics oscillator will get overbought and it will actually stay there for a while. Typically, it can stay there for anywhere from 6 to 8, even 12 weeks, and sometimes even longer. So what you'll see is you'll see it oscillating up here at the top rather than coming back down to oversold and then crossing back up. If it comes back down to oversold in this location, then what you'll end up with is you'll probably end up with your Ethereum trade back down around 1,000. So you actually want, in this particular scenario, you really want your stochastics to stay overbought like this, at least while this trend gets going. And then when it makes its first corrective cycle, then your stochastics will come back down, probably get close to or around oversold, turn back up. That'll be your continuation signal. So I'm just saying that to say that I'm not overly worried. Let me look back here and see if we can find a couple of examples where this has happened. Well, I wasn't really prepared to do it, so I'm just going to end up sitting here searching with you. I don't see any quickly off the chart here, but you just need to know, after a bear market like this, after a bear trend like this, it's very common for your stochastics oscillator to get overbought and to stay there. All right. So with that said, let's zoom in here and let's take a look at our trade setup. We're going to do an entry as we break out. And as we start making some higher moves, we'll put our stop down here just below our pivot area, which also is around our yellow 20-period moving average. And then our targets, we will have a little bit of a target. And I say a little bit because I'm not expecting it to be a big problem, but we'll at least notate that we're going to have some pivot area happening here around 1900, give or take a little bit. I'll give you exact numbers in a minute. And then our next major pivot area, I mean, really our target is 32 to 3600. That's our ultimate target here. You got some turns that are happening in here. You got one that was happening in here around 2600. So we got a few on the way up. But I think we stand a pretty good shot at getting Ethereum back up to the highs that we're wanting to see. or at least somewhere up in that ballpark. So let me extend this guy over. We'll use him as a target. Oops, I did not push the right buttons. I don't know what I pushed, but it was not the right buttons. Still not the right buttons. There we go. Now I'm pushing the right ones. All right, so we'll scoot that one over. That will be one of our targets, and then we'll come over to these these purple kind of lavender lines that I've got here. So, all right, let me zoom in a little bit more so I can fine-tune this. Our entry is going to be right about here as we break out. And actually, now that I look at it, that entry is in line with that first potential turning point. So about 1773, 75, somewhere in there, needs to be our entry for this trade. Your stop needs to be, initial stop, needs to be right around your 20-period moving average. And then let's look at some targets. We'll go, I'm actually going to be a little conservative and just call 3,600 as the high. Even though 4,000 plus, even 4,600 is possible, I'm going to be a little bit conservative about that because just that phase alone, folks, that phase alone offers a 5-to-1 reward to risk ratio. It's an incredible setup that we've got here. So there you have it. Let me give you some numbers here. Here's where the numbers came in for our entry price. Came in right at 1767. Our stop came in at 1373. Oh, that was horrible. I'm sorry I drew that so bad. But it's 1373. Here, I'll just scratch it out. 1373. There you go. And ultimate target, 3672. You do have a zone here. It's kind of 3250 up to 3672. And then this potential target right in here, let's put a number in there. It's really right around 2,500, just using a round number. So it was slightly higher, but 2,500 will be a good kind of a target one. So we'll put T1 here and T2 up here. T2 is a zone. It's from 3250 up to 3672, okay? So that will be this trade setup. You can just track it and watch it and see what happens. I'm not giving you specific trading advice. I'm just giving you what I personally would do for a trade setup here. All right, and then the last one I want to draw your attention to, and I know we're going a little bit long here, but there's just so much going on. How can I not talk about it? And that is XRP. Now, I think it is still possible that XRP is going to drop one more time. I know, those of you XRP lovers, you are hating me right now. You're probably hitting the dislike thumbs down. Don't hate me. Don't hate the messenger. But there's something that I do want to show you, and I shared this with you, I think it was last week in that update, and that is a bullish divergence that's happening here. This is a great sign for possible reversal. All of these things look good except for we're pounding into that 50-period moving average, and instead of breaking to the upside and starting to create some sort of a continuation pattern, it's trying really hard to roll back down. And I have said all along that I thought that XRP was going to drop down to 25 cents and then rally. I still think that's a possibility for XRP. But in light of all the other optimism we've got, I'm going to do it. I'm going to do a trade setup. Doesn't mean we're going to get into this trade. It just means that I'm going to do a trade setup. People say, well, when would you be bullish? I'm going to tell you when I would be bullish. I'm not bullish on XRP yet. But when I would be bullish, it's going to end up looking about like this right here. And I'm going to be very, very generous on a couple of things here. This purple line that I've got in here at 52 cents will be one of our targets. But I think you got a good, really, I mean, long term, yeah, I think everybody who trades XRP is very bullish on this thing long term. In the short term here, 60 cents is a good target. There's another one up here at 70 cents. Just kind of pick your poison because there's, a bunch of these are really good turning points. Pick one of these as your targets. My major target is going to be 90 cents. 90 cents. When we get to 90 cents, you can bank on it. XRP is going to take a break. Okay? So we've still got to get into the trade first. We got to get some better confirmation. Let me write these numbers up here for you. First entry is going to be right around 39.3. So it's very specific here. So we'll put entry at 39. It's 39 cents and 3 whatever that is. All right. Our stop for this trade is going to be at 30 cents and a half. 30.305 is where that number is going to go. And then our first major target is right here at 50. What is that number? About 52 cents. So let's see here. Why is my, oh, I just wiped it all out. I'm sorry about that. All right, let's see if I can't get my pen working. All right, our entry will be at 39.3. Our stop will be at 30 and a half. And then target 1 will be right here at, now I've already forgotten it, 53 cents. And then this is a major one up here at 60. I'm just going to build you the grid right here. 60. We got one at 70. We got one about 84. And the major one comes in at 90 cents. There's the grid, folks. Take a screenshot of it. You can decide if you think I'm crazy. It's all right. It won't be the first time if you think I'm crazy. But that's the way that I'm going to approach this trade. And that's what I'm looking at. So, I want to remind you, I'm actually not ready to do this XRP trade. I think it is going to probably drop down one more notch. We'll see. Full disclosure, I already own a bunch of XRP. So, just full disclosure. In other words, I have hodled through some of this. Sold some, but hodled some of them. All right, so there you go. There's a trade setup for XRP. And look, there's a lot that are happening. There's a lot. In fact, I've got a whole list right here. I don't know if you can see it, but I got a whole list of cryptos that are setting up. I'm going to be releasing more videos later this week so that we can start getting some of those trade setups in here. And I'll try to do more as the individual trades actually confirm. I'll try to do videos to go with those as well. So get yourself to like and subscribe to this channel if you've not done so already. Subscribe yourself here to our YouTube channel. And let me ask you this. Is this, like, whenever you see me do this kind of trade setups, is this different for you? If you're like most people, it's remarkably different, because most people have been taught that they need to just buy and hold. And in the world of crypto, we call it hodl, right? Hold on for dear life. Hodling is great when the market's going up. It is destructive when the market's going down. And people say, well, you can't time the market. People come up with all these stories about what you can and can't do, and they're just not true. Those stories just are not true. If you want to beat the market, if you want to actually make money trading crypto, like real money that you can take, put it back in your bank account, go to the grocery store and buy yourself the stuff to make a sandwich. If you want that kind of money, you got to learn how to trade the market. And let me share something with you. If you haven't seen it yet, this is my 7-day crypto challenge. This is free, folks. You can do this for free. I'll put the link down below. This is my 7-day crypto challenge, and I'm actually going to teach you all the ins and outs for how to be an active trader with crypto. It's a much different philosophy, and it's a much more profitable way. So if you're tired of losing money with crypto, you're tired of hodling and, hoping and wishing and praying that things turn around, let me help you out. Take my 7-day crypto challenge. Like I said, I'll put the link below, or you can go to 7daycrypto.com, 7daycrypto.com, and you can sign up to take this 7-day crypto challenge. It's absolutely free. And what's the worst that happens? You learn something about crypto, right? That's the worst that happens. So go take my 7-day crypto challenge. And again, if you haven't subscribed to my channel here, then get yourself subscribed and keep your eyes open. We got a lot of cool new stuff coming out this week. All right. So until next time, folks, happy trading, and we'll talk to you soon.